Florida has a hurricane, 95% coverage of insurance is there.
If people are living in houses and they're paying electricity bills, it's not a very difficult thing to mandate that anybody living in a house must have a certain amount of insurance cover for that catastrophic event, were it to happen, because there is a social impact.
That we need to increase penetration to protect. The protection is our job as insurance company.
The reality is that cyber risks and cyber attacks are going up every single day.
How the insurance companies are managing the new age risks. We have a fantastic panel today. So first what I will do is that ask them to share their opening remarks, opening thoughts on the issue of on the issue of climate change first to start with. So we are asking that with climate related disasters are becoming increasingly frequent, how is India's general insurance industry is evolving to manage these new age risks? Can we start with Mr. Tapan Sinal?
No, thank you. It's a very important question. When you look at climate change, it's not only about natural disasters, also about illnesses, new viruses, new kind of illnesses, what affects the work environment. If the heat goes up, the gig workers can't go to work. It's a wide spectrum of risks which come together. But the question is more deeper than just asking the general insurance industry as to what they are doing. If you look at a catastrophic loss, the economic loss, if it is 100, the entire coverage, which would mean what is the payout from the insured bit of it, and the government, what it pays out in terms of the national disaster schemes that would be there, would be less than 10% of the total loss which happens. 90% still be uncovered, which obviously has a far-reaching consequence. It is a 2% GDP impact on the growth of the country. It pushes the state where it happens much below what it is. When you're looking for Viksit Bharat, this has to be addressed. Now, for this to be addressed, it will require government and the insurance industry to come together to address it. It will require different modes of looking at catastrophic bonds, looking at a solution in which you have tiered level solutions in which government puts in a layer, then the industry puts in a layer to do that. The problem is big. I don't think that we are comprehending the magnitude of the problem and the ability to solve it. If I put numbers, then we shall realize that if I look at, let's say the last year, losses, it runs to lakhs of crores. And in terms of putting together the solution for it, I don't think anybody has a clear answer on it. But is the roadmap there? Yes, we have examples of Japan handling this position. We have examples of UK handling a situation like this. Examples in Australia, a situation like is getting handled. We have solutions like CAT bond in the national market, which is there. So we have to put all that together to be able to make it foolproof. So good that you raised this point. It's a very, very important topic.
Right.
And it requires many players to come together.
Yes, Mr. Dahiya, your thoughts.
I think Sir's already covered. Sir's already covered the fact that it's a very important area. Frequency has been increasing. I just read that in the last 10 years, we've had more catastrophic events than in the previous 100 years. And all of these are having a negative impact. Now, talking about solutions, I think the insurance industry and the government really need to come together on this and align interests along with the consumer. And what do I mean by aligning of interests? Aligning of interests come in the form of encouragement or mandation. It's not hard to mandate if you really think about it, right? If people are living in houses and they're paying electricity bills, it's not a very difficult thing to mandate that anybody living in a house must have a certain amount of insurance cover for that catastrophic event, were it to happen, because there is a social impact. A single insurance company may or may not be able to carry that risk entirely. So freeing up reinsurance is an important critical aspect. But I think, look, I'll just share one anecdote. India has the third highest incidence of cyber fraud reported, right? It has so much of DPI, so much of possibility, but still the penetration of internet users who can pay for cyber insurance is something like less than 1%. I know, covering a slightly different area. What is that telling you? Unless mandation in some form or some form of payment along with another product happens, actually, see, in our country, people are just starting to buy health insurance and term insurance, which is so critical for families.
Right.
Getting people to actually buy catastrophic cover or buy cyber insurance for themselves and actually take out money and do it just for that event is a very hard task. And I think more than financial support, where the government can help is exactly this mandation point.
Right. Mr. Rao, apart from how insurance are addressing these issues, can you also throw some light? What are the changes being implemented, in underwriting practices, risk modeling, and claim management?
So let me look at risk and claim management slightly differently. I think let's step back a little. Fundamentally, when the claim is made, when I'm not talking about cat events, I don't think anyone's happy if an incident happens. The customer is definitely not happy, right? Because the customer has suffered losses. I mean, nothing can compensate. Insurance can't compensate for what you have lost at the end of the day. Let's face it. There's a psychological damage and other aspects to it. As an insurance company, paying out claims obviously means, a financial impact on them and also on the customers finally in terms of reflects in terms of future premiums, so on and so forth. So we talk about claims and underwriting related to cat events or climate change. I think one of the things we need to do is to make sure that there is a system of incentives wherein a customer is incentivized for certain behaviors to prevent losses from happening. So, the generally, for instance, has a tie-up with UNDP, United Nations Development Program, wherein small businesses especially, in case they take steps on two aspects. One is making sure that their assets are secure. Second, in reducing carbon footprint. They get benefit in terms of premiums and in terms of coverages. So I think underwriting has to move just beyond the technicals to make sure that the risk is shared between all stakeholders and promotes behavior and in the sense creates a virtuous cycle wherein the price of the risk keeps going down every single year. So that's my take on underwriting and claims here. Thank you.
Right. Thank you so much. Mr. Jha, your initial thoughts.
Good morning to all of you. I think climate change has become a reality. Last 10 years back, we used to hear that we have to save water, we have to save environment for the next generation. And now it has come the reality. Today we are seeing rains happening in Mumbai in the last week of October, or the Montha cyclone coming. There is the fourth cyclone during this year in India, which earlier used to have once in 4-5 years.
Right.
So it has become a reality. And one thing is very clear, as our chairman IRDA also said, that we need to increase penetration to protect. The protection is our job as insurance company. We have to make sure that awareness to the ground should reach, and we should provide protection to maximum people. Second thing, once these kind of things are happening, we have to make our underwriting more sound. As earlier, what you used to do, the actuarial model, whatever happened in the last 25 years, we used to look into it accordingly. We price our product and we make such kind of product. We have to make sure that it should be dynamic. We need to use the your satellite imaging or the AI models, data-focused approach and other things we have to do and make sure that it should be more dynamic, more precise, more predictive analysis to be done so that the underwriting should be up to date. Also new products like parametric insurance. I can say that this is a very good product to take care of climate change. Last year we did with the Nagaland Disaster Management Authority, where it is the claim is based on certain climatic parameters to be reached. Suppose there is the temperature goes beyond say 35 degree or 40 degree, there is certain claims are being done. So it has been very successful and we are also reaching to many other state government for this.
Correct, correct. Mr. Sinel, do you think that given the growing severity and recurrence of climate-related catastrophes, do Indian insurers currently have sufficient capacity to underwrite the risk independently?
See, I think Yashish mentioned the issue of insurance is pooling of risk. Capacity gets created. I don't think capacity is an issue for anything. The more risk you write, that's how capacity gets created. So if you look at, let's say, and this is a very interesting question I asked my friends, when they're in US, they have a householder insurance, they have a home insurance. When they're in India, the same person does not have a home insurance. You can try it here also. In audience, if I ask how many people have home insurance, hardly any question, no hands would go up. No, it is. In fact, if I ask this question, insurers also very few hands would go up. No. Why is it so? It is because in US it's mandatory to have this cover, no, and that is Ashish mentioned that. So if Florida has a hurricane, 95% coverage of insurance is there. Claim payouts happen, and the GDP growth of Florida actually moves up because money gets deployed to rebuild the state. When in India a catastrophic loss happens, the GDP growth goes down because the money is not there to put that on. Now, if you put that, and everybody starts putting it together, sometimes I tell, and I've spoken about it in a lot of forums also, and to the government also, I'm not talking about give it to insurance companies. Like if you look at government health scheme, some state gives it to insurance company, some keep it as state, as trust and manage it. I'm perfectly fine. Issue is big. It has to be solved. So let us say SME, MSME. 94% of SME, MSMEs are not covered in India. Imagine when a catastrophic loss happens, 25% of them become bankrupt. No, 25%. It's a huge number. Now let us say if an SME, MSME is setting up business and insurance component is negligible, it's a very small component, is made mandatory. If the state feels that they want to keep it, let them run it as a trust, let them keep the premium and pay off when a claim happens. If they want insurance companies to manage it, they can do so. So the capacity management is not an issue. The issue is the risk gets spread across, then it gets managed. So the point we have to think is how do we increase the risk coverages,
Right.
and how do we build that together?
So Mr. Dahiya, do you think the answer really is government-backed risk pool to ensure adequate coverage?
Eventually, that's the answer of insurance all the time. And Sir is absolutely right. I have a house in the UK. I cannot not have insurance for it. It's impossible. I have a house here, which is actually very close to pine needles, which can catch fire. I sell a lot of insurance policies. I have a platform that sells insurance policies. Do I have home insurance for it? No, I don't. That's the reality, right? And I think it's very easy to do. It's not hard. Somebody has to hear it. It's about risk pooling, right? And all you do is, like you get electricity connection, like you get a gas connection, like you get everything, you make it a utility. You must, and keep it competitive. I would say, the government has this fear that, okay, this will benefit private entities, private companies, etc., etc. Basically, just say you have to have health insurance if you want electricity.
Is the mic working?
Sorry. You have to have health insurance. You have to have catastrophe insurance. You have to have home insurance if you want electricity in your house. It's as simple as that. And you can buy from anybody. There are 53. There may be 200 more insurance companies tomorrow. You can buy from anybody you feel like. But the point is, it is mandatory. Just like you have for car insurance. You have it for car insurance.
Right.
But you don't have it for home. You don't have it for health. And that is why penetration doesn't happen. That's where risk selection happens. That's where all those issues happen. And that's where capacity does not get created.
Right, right. Now coming to the cyber risks that we are facing, how can the general insurers innovate their products, Mr. Rao, to offer a comprehensive protection from corporate data breaches, ransomware attacks to individual level risks such as digital frauds. So how can insurers innovate to give a solution?
So I think the reality is that cyber risks and cyber attacks are going up every single day. We see that in all companies. We see that, there are a lot of cases that I mean, all of you have covered as well. I mean, a lot of organizations, including banks and insurance companies, have got breached. I think the real tragedy we see is that, to an extent, I think institutions, even if they are breached, they're protected because most institutions understand the need for insurance. I think the real issue is that at individual levels, when people fall prey to digital scams, there's really no recourse. Of course, there's recourse in terms of going to the law, but it's simply like any other product which is not motor or not health, the non-motor, non-health piece, be it house or be it, I mean, for example, I have a dog. I mean, I mean, overseas, if you have a pet, for example, you need to have third-party liability insurance. And here, your dog bites somebody. I mean, you know, frankly, I mean, there's no recourse. But similarly, I mean, just to make a point, the fact is when it comes to cyber risk, I think the focus on building a retail franchise or for individuals to make sure they protect themselves is minimal. It's not that products are not available. It's simply that there is, I mean, there's no appreciation for the fact. And this despite the fact that, you know, you see it all the time in the media that, you know, a lot of people have fallen prey to scams and somebody's account has got hacked, somebody's clicked on a link, so on and so forth. A lot of it is sheer carelessness and lack of education. But the fact is there's no appreciation at an individual level. I think that really could be an opportunity for the insurers to go after. Of course, I mean, you can't mandate something like this, unlike, say, cat events, household, or other forms of insurance. But that's where I clearly see a gap as far as cyber and digital is concerned.
Right, right. Mr. Jha, innovation to provide a comprehensive offering for these cyber security risks.
Again, it's very, very important risk after you discuss our climate risk. Yesterday, I was just hearing in some conversation, and we came to know that the total cyber fraud, the loss due to cyber fraud is 0.7% of GDP. And that person also said that 2/3 of the frauds or the crimes are not reported. So that means we are losing 2% of GDP on account of cyber frauds.
Correct.
So again, very, very important matter. And when we look at the number of UPI transactions, 600 million per day, 490 million of people using UPI. The kind of even our SBI Yono, 10 crore customers are on SBI Yono. So the kind of, the way we are using the internet and digital platform, I think the risk has similarly gone up, whether it is for individual, whether it is for the organization. And we also need very, as I said, different way to underwrite such kind of risk. At the same time, the insurance companies are also coming with a lot of new products to take care of individual risk. I've seen many products which has come, even if we are sharing your password, even that is covered. One of our product is like that. And if you look at the earlier times, people used to keep money in their home. But then some burglary, some dakati and other things happened. People shifted to banks and other places. So similarly, the kind of cyber fraud happening, the larger people have started losing faith on financial institutions.
Right.
So it is very important that we should keep on making new product, new ways to protect it. Even in the organizational fraud also, the insurance companies are providing not only just for the financial loss, they also give the complete roadmap how to take care in such kind of things. So I think these new risks which are coming, we are also making new steps to take care of that and protect the
How
citizens.
important is partnership with the tech companies, with technology?
It's very important because, as I said, the ways the cyber crimes are increasing, they are always 2 steps ahead of whatever any financial institution is thinking. So unless until we are also having collaboration with much better tech-enabled companies, we are not able to take care of those things. So I think it's very, very important.
Right, thank you so much. The other area I wanted to touch on is the growing popularity of electric vehicles in India. So how is the motor insurance segment evolving? Mr. Sinal, you can start.
See, if you look at motor is an interesting thing. It has a lot of different components, hybrid, EV, EV, if you see, the moving parts are less, the requirement of servicing is less. The battery is very important. How do you take care? That is a major component, and if that goes wrong, it catches fire, it builds it up. So what we did in India was that we looked at markets which already had very strong EV component there, and how the risk pooling happening there. What are the challenges that the customer is facing there? One, we picked that up. Then secondly, we also looked at the Indian market, what is unique to Indian market, and what are solutions that we have to give to customers. So what we realized is, along with providing solutions for accidental related, which typically an insurance job is, it also provides solutions to infrastructure related solutioning, right? In terms of be it charging station or battery swap happening, or battery runs out on the road, then you provide assistance to customers. How do you get them back on board? If I look at the today's scenarios, the EV insurance has evolved to an amazing extent to provide support to the EV vehicle. It has picked up all the components and is doing pretty well. Though internationally, I see that now some countries like China have a concern on the loss ratio on the EV vehicle which is there. US also had an issue of the liability claims on the EV vehicle coming up. The third point which would come to India later is that if India has self-driving cars, then if an accident happens, then who is responsible? Not the owner, it may be the manufacturer. So then the liability part starts coming in. So it's a very fast evolving insurance, and it's a very beautiful piece. And I enjoy it a lot. But today, if I look at the solutioning by the Indian insurers to EV, it's pretty good.
So motor insurance has different layers. So
it's very the way you look at automobiles complexity. The insurance of automobile also is pretty complex.
Very complex.
But it's interesting. And I would say that currently the EV solution provided insurance is pretty good. I'm waiting for the time to when self-driving cars come in, then how do the liability gets fixed on that, and how do the court looks at it, is what would be the next phase in the EV space.
Right. Mr. Dahiya, your thoughts on motor insurance?
So very quickly, just some data points. About 5.5% of the searches that we receive now are EV, which is growing. It's about 55% up over last year. The battery product, which is basically catering to a kind of breakdown of the battery, now has almost a 70% attachment, 67% attachment rate, which means that's becoming a very critical area of concern. Clearly, there is also an intent issue here. My belief is that things like third-party losses on EV could actually be much lower, simply because it's a different consumer set who's starting to buy EVs, and maybe the sort of fraud element may be much lower. I think that could be something that can be looked at. But yeah, on the whole, this is an area that's going to grow over the next 10 years on a stable basis.
Right.
And so the liability points really need to be understood, whether it's going to be, who's liable for what.
Right. Claim handlings in EV era. Mr. Rao, can you share your thoughts on this? In the EV era, electric vehicle.
So claim handling in the EV era, look, I mean, I don't think it's going to be any different from what you're doing for other products, but I think, I remember this when there was the Berkshire Hathaway AGM, somebody had asked this question of Warren Buffett about EV specifically. And the question asked was that, again, what happens in their autonomous vehicles? What happens when you have EV and there's not really clear about how the underwriting and the loss ratios are going to pan out? I think there was a very interesting response saying that finally you need insurance. And where does the liability go to? It goes to either the manufacturer or to the user. But the liability is still going to stay with someone. I think it's, as Jashish pointed out, it's still an evolving piece. I think we have to somewhere understand that the liability, the way it pans out over a period of time, could change. But in terms of underwriting principles, again, it's the same. It's going to depend on, the kind of data you get. I mean, what kind of pattern recognition you see, how do you see this growing and how it's proceeding over a period of time. I don't see how it's going to be any different compared to any other line of business.
Right. So now I will focus on the recent reforms which I also talked in the life insurance panel, is the rationalization of the GST rates. So the question we are asking here is that with the GST waiver on health insurance premiums, will it make policies more affordable and accessible to the larger section of the population? Mr. Jha, if we can start with you.
I think yes, absolutely yes. insurance is based on three principles: affordability, accessibility, and awareness. The three part very, very important. And this, when we have completely waived off the GST on health insurance, this is increased in a big way the affordability part. Now, not only affordability, the kind of media coverage it has got, it has also increased the awareness. Because now everybody is thinking that yes, health insurance is affordable. So that has increased the awareness also. So now it is our turn as insurance companies to reach to the last mile, to the tier 2, 3 cities, to the rural segment, to the under-penetrated areas, and make sure that the volume increase. So take care of whatever input tax credit hit we are taking in the first phase. So if that is what we all are working towards, to make sure that the volume should move up and penetration should move up, and we should take care of accessibility and awareness part.
Right. Mr. Rao, input tax reverse credit, impact on distribution, commissions.
Of course, I mean, there is, the offset issue is obviously there. So, but, the fact is that because you are not charging GST, you can't, obviously take the benefit on the commission side. Having said that, look, let's understand the math. The fact is that, it's 18% cheaper for the customer, effectively, or about 16% cheaper in case you use 118 as a denominator. The thing is that, you don't have to really increase prices to the fullest extent just to make good. You can, so the customer is still going to be better off mathematically, all things being same. Just to add to what Mr. Jha said, there's one more point I wanted to make is that it's not just about new business. The fact is, a lot of customers, and I'm sure it's true for all insurers, we have suddenly discovered that the renewal premiums effectively are lower than what they paid last year. Right. So what it's also hopefully going to do is going to improve retention for our customers.
Correct.
Right, because you do understand that, there's a drop-off, there is porting, there's migration, there are a lot of things, and sometimes there's sheer, lethargy that you don't go ahead and proceed with it. So, and that's another factor, which is another factor is massive. The fact is that most of the health insurance business any single year has a larger proportion of renewals than you, and I see a great positive uptake there too.
Right.
We're already
right.
seeing it.
Right. Mr. Dahiya, what kind of impact you are seeing due to the GST cut and ITC reversal?
So I think, first of all, there's renewed interest from the consumers. So you're seeing much higher growth rates. When I say and it's continuing. The interesting part is it's continuing. So even as of yesterday, as of day before, it's on. Now, do I believe this will continue 1 year from now? Maybe, maybe not. Very difficult to say if 1 year from now we'll still be talking about GST, because these things, there was a time before GST, there was a time after GST, and it's going to be kind of something that happened at one point and people forgot about it after a certain amount of time. I think there's a lot of media interest specifically in, what happens to various things. I think it's time, and I'll make a different point here. I think it's time, and somewhere Anup referred to it. Insurers carry the risk and nobody else does. We as distributors don't carry the risk. The service providers, whether it's garages, hospitals, nobody carries the risk. And what that does is it pits the insurer against everybody at the point of claim. Because, think about it. A distributor loses nothing by selling to a customer who's likely to have higher claims. In fact, would like to sell more that way, right? And a hospital or a garage gains when a claim happens. And I think this is the biggest flaw we have. It pits everybody against. And somewhere, we all need to become partners in risk. It doesn't mean the insurer is absolving itself of the responsibility, but it does mean it starts to become a shared responsibility. And I think our thinking, quite honestly, we've had too much conversation on what is commission, what is expense of management. We need to move on. We as an industry have a job to protect the consumer and operate at an operating ratio, which makes sense for our shareholders. So the conversation really needs to come down to combined operating ratios. And that is where the partnerships will evolve.
Right.
So if one distributor can do a much better job than another distributor in risk selection, commission is just a part of it, whether it's called commission or expense ratio or whatever. And I think we made a change in our industry by moving from commission to expenses. And I think now we need to make a change of moving to operating ratios,
Right.
where we all become partners, including with our service providers. Because without that, the alignment will never be there, and people will keep working towards different purposes. I think GST, my personal opinion is 6 months from now, we won't be talking about GST.
But so the pain is short term, you mean to say, for someone like policy?
I genuinely don't think there is pain. Let me kind of just share the numbers with you, right? We were growing at 60% before GST on health. I think, yeah, we are large and we grow quite fast. We are growing after GST at 102% year on year. That's more than an 18% growth.
Okay,
right?
so the volume will...
But the interesting part, and I'll share this also, I'm just being very specific about numbers. Our combined operating ratio for our partners is at 93%, which is much lower than their combined operating ratio on other channels, right? So I think that is where the story is going to go.
Volume will make up for the margins.
I am not actually interested in the volumes alone.
Okay.
I'm interested in becoming partners on operating ratios.
Okay.
Because that is where we become genuine partners. And that's where we know we are aligned for the long run. Because if we are not there, if I have a book which is at 150% claims ratio for the insurer, how does it matter whether the insurer pays me 0% or 2% or minus? It should be charging me 50% for doing that business.
Right. But Mr. Sunil, will it move the needle on the penetration by making it more affordable?
So I think Yashish gave the answer. Like he said, from 60% growth has moved to 100%. Now, will that move the needle on penetration overall as a country, if you look at it? To some extent, but not to all. So the problem statement is, how do you get everybody covered for health? I think that's where we're starting from. I think now, but where discussion points have come to, I think first and foremost, I'm very thankful to the government for the GST thing. It's been a long-standing demand of the industry. I think we've been asking for it for a long time because health is not a luxury thing, and that, for that matter, no insurance is. No, so I think health has been taken care of. Why not automobile? Why not home insurance? Why not? That's the first thing. It's not a luxury item. It is a necessity. That is what is the first relation. The second thing is that how do we take care that everybody is insured? We have the schemes of the government which insures people below poverty line. Now we have for above 70 years of age. That's taken care of. We still have about 40-50 crore people who are uninsured. What impact does it have on the economic growth? It has an impact of 1.2% in terms of fall in the economic growth. If all were covered, India would be growing at 1.2%, much higher than what is growing currently. Right. Now, how do we solve this is what the bigger problem statement is. One way is, if you look at some developed nation, they have it mandatory that every employer has to cover their employees. It's mandatory for health insurance. You don't have an option to employ somebody, not cover them for, which I think is very, very logical. But it is your responsibility as an employer to ensure that your employees are taken care of. So why can't, let's say in India, we have this mandate? Now, if this mandate happens, then the question can be, people can say that the cost of business would move up. Now, how do we solve that? If you look at a government health scheme, the average ticket size, because of law of large numbers, where the affordability starts coming down more and more, is about, let's say, 3,000 to 4,000 rupees for a year for a sum insured of 5 lakh rupees for a family floater cover with pre-existing disease covered. Very ideal. Imagine, So let us say if I have house help, and if it's mandatory for me to cover every employee, even let's say as an individual, and if I have to pay 3,000 rupees a year, I don't think it is going to be so expensive. And if the government says on that you get tax rebate also from your personal income tax, the government also loses no money. As an organization, if I get the liberty of showing it as a CSR fund money, nobody is losing money. But India's economic growth happens at 1.2% faster. Everybody is taking care of healthcare, which means that the healthcare infrastructure starts building up because they have more pays coming in, which leads to propulsion of growth of the economic activity happening around our space. And affordability happens because the numbers are covered is now everybody, right, which is about 140 crore Indians, which is there. So when we look at a problem statement, I think we have to go beyond the micro nitty-gritties of things and start looking at how do we solve the real problem and how do we take a structured basis which does not cost the government exchequer, which is the taxpayers' money, but at the same time does not hurt anybody's pocket, but it solves the problem overall in putting it together. I think that is how
Correct.
insurance should be seen.
Right, right. The other important issue which the industry is facing is that, and mainly the customers, the tussle between the hospitals and the insurers. So, since you are also a chairman of the council, so what is the root cause of this problem?
No, I think in most of the statements, I always try to de-link. I said, forget insurance companies. No? Let's leave them aside. Let's look at, again, the problem statement, the bigger problem statement of what is to be solved. Now, if I look at, and this is a Niti Aayog report also, which said that about 10 crore Indians go below poverty line every year because they can't afford healthcare. Now, that's a Niti Aayog report, no? Which again comes from a WHO report which is mentioned there. Fair enough. Now, the next statement, if I see, is that the medical inflation is 3 times the average inflation.
Right.
Okay? Now, that's also a commonly available statement. Now, we all know the compounding impact which is there. No? And I think the mutual funds and the investment guys have taught us that the compounding impact of putting 100 rupees every month can lead to crores of rupees.
Right.
Now, if you have 3 times the medical inflation of the common inflation and your salaries are linked to inflation, all your DA-linked salaries are linked to inflation, what does it mean for healthcare affordability in a compounding basis 10 to 15 years from now?
Okay.
So if today 10 crore Indians are getting poor because they can't afford healthcare, now the compounding impact of a 3 times medical inflation to normal inflation would mean that this would go out of control. So we have a huge problem statement coming up, no, in the near future. Are people watching that? Now that is a problem statement. Now let's look at the industry. From the industry, what did we say? We said bring in transparency in healthcare expenses. How do you bring in transparency? The government had set up a national health exchange under NHA. It's a government setup, not an insurance industry setup. Government spoke to us, spoke to hospitals. Every insurance company immediately went and logged into NHA and said we are part of it. Did hospitals come on to board? No. Why? It allowed transparency of payment
Right.
and payer coming in, one. Second, the regulator told us, set up common empanelment so that you can look at efficiencies of scale, you can look at fraud management, and look at standardization protocol. Now we set up common empanelment. Now 1.5 years negotiation with different associations. Did anybody come forward and say, let's do that together? No. So then we started now, but I'm happy to say about 4,000 hospitals, which are at the lower end of the chain, the middle end of the chain, have already lined up for it. We already have over 100 signed up for common empowerment. It has started now. We'll get there.
Right.
So the issue here is that what is that we are trying to solve, and why it is important for the country that it should be solved, and what is that we leave behind and not doing so. Now from there, frictions will come, negotiation, discussions will happen, but on the table we should always bring in that what is that we are trying to solve, and that has to be worked on.